So EG is in the insurance business, and we've looked at this company a few times, and I think it was N. Kiter that asked about this company or saw it from a report that he saw. I forgot the publication, but these guys are in the reinsurance and insurance products area. Insurance has really been working in 2024. I don't see why it won't keep working because their fundamentals look really good. This company has a market cap of 15.5 billion, revenue is 16 billion. And PE, look at this PE, ridiculous, 5.6. NVIDIA was at like, I forgot how much. How much are you at NVIDIA? 53, which isn't bad, by the way. If you want to be shocked, look at Palantir. So that's looking really good. The dividend, 2.2% dividend, looks pretty good. Analysts think it's discounted by 18.5%. Now let me take a peek at their website, just to kind of get my head around, if anything, what the brand offers here. So, okay, so they underwrite, they provide insurance. And there's some companies in the insurance business that they kind of label themselves a risk management organization, which, and those tend to be like unique policies. Like, hey, I want to insure this very rare or unique situation, and they do that. These guys here, okay, what we are offering. Let's see what we got here. So I'm not getting my head around what these guys do. It's like, do they do business insurance? Make this a little bigger for you guys. See if they can give us a quick. All right, here we go. So diversified reinsurance and insurance of P&C franchise. Okay. So they, the way insurance companies, the reason why they're really good businesses is they offer insurance, and whoever's receiving that policy or buying that policy is paying a premium. And those premiums are pretty much collected, and then over time, the insurance company will have to pay on claims. And there might be a period of time when they get to take that money and invest it. And that's why they have two forms of income. Is, okay, we're going to make money because there's going to be a profit margin on the policies that we sell. They have very intelligent actuarians who are mathematical geniuses that figure out, well, if you sell this type of policy, you're going to have claims up to this level, and we're still going to have an adequate profit margin. And then while you have the money, you get to invest it, which is one of the reasons why Warren Buffett bought Geico. He loved the fact that you had all this premium cash that you get to invest and make more money. And Warren Buffett has recently bought into Chubb. So, all right. So I have a sense of what they do as a business. Let's get back into looking at their fundamentals. The company is growing nicely. It's been a growth or not a growth, but it's been a growing company for some time. They did have slow growth in 2022. I think there was adjusting that needed to be done in 2022. A lot of assets went up in value, and they had to be, the policies had to go up in price because the assets they were covering had a greater value. So that made sense. I know that was a pretty good, one of the reasons why inflation was going up so fast is insurance was costing a lot. And understandably, if insurance companies have to pay more, they have to charge more. It's like a one-to-one. All right, so they're growing nicely. That looks good. Very good free cash flow. And the cash flow is growing really nicely over time. Nicely done. And So their profit margins look good. Free cash flow margin looks good. So that looks really good. So they have $5.2 billion of free cash flow in the trailing 12 months. Yeah, these guys are highly discounted. They're making, so the market cap's 15.5 billion. And in 1 year, the company produces free cash flow, cash that they can buy back shares, they can dividend down, they can put it on the balance sheet, up 1/3 the market cap. That's very high free cash flow. And I don't know that things are going to change all that quick. I think the cash flow is going to be consistently coming in at that level. So that looks really good. As I started with, insurance has really been working. You can see the fundamentals are just tremendous. Revenue growth, free cash flow, profitable. Taking a peek at the balance sheet. They have $5.5 billion of cash, $3.4 billion of debt. So they have a surplus of cash of $1.8 billion. Beautiful. I'm going to look at their dividends and see if they're buying back shares. So payout ratio. Looks like they issued out shares. Maybe. Okay. So this looks really good. And within insurance, a lot of companies look good. Chubb looks good. I started buying into Chubb yesterday. I'm an Allstate stockholder. I've been doing well, and I'm probably just going to hold my shares. And Everest Group looks really good. But just about every insurance company we're looking at looks great. To compare EG with a couple of other insurance companies that I'm familiar with, see how they've been doing against these guys. So we have Progressive, which did really well. And then we've got, let's go with Chubb. And then we'll pop Allstate in there. So these guys over the 1 year. So it looks like Everest didn't do as well, but you saw their fundamentals. They're really, really good. Chubb is in second place. Allstate is in second. I'm sorry. I kind of said that wrong. I guess in fourth place was Everest with a 3% rate of appreciation over 1 year. But that could mean that they're discounted. They're just not recognized, maybe smaller than the others. Of course, Progressive is probably very well known. They have funny commercials, and it's fun to watch them. And they're up 53% in 1 year. And they're growing really well. Really good company. Allstate did well, 40%. They're doing well. And then Chubb is up 25%. And I think have stronger fundamentals than Allstate and Progressive, which is why I started to buy into them. And Everest looks great, but it's kind of been lagging the other players in the industry. In insurance, the way I'm going to play it is like I'm finding small caps in technology, and especially biotech right now is like there's the good opportunity in biotech that I'm finding. And I'm going small caps in those spaces. And with insurance, Allstate's a bigger cap, Chubb's a bigger cap. I'm fine with those. I'm probably not going to go to a small cap for insurance. And I'm good to go on insurance, but I could not argue with somebody buying into Everest. It'd be like, it looks pretty good. It looks the fundamentals look really, really good. So all these companies look good, but pick the one that's right for you. So I think that was pretty good little newsletter you got, and Kiter. EG looks good.